Oh, here's another question for the audience. Who feels more comfortable investing in the Australian stock market when compared to offshore stock markets? Who's more comfortable with the Aussie market? Most people. And that's quite normal, and that's called home bias. In fact, Australian investors, typically 30% of their portfolios have exposure to the Australian stock market. Offshore markets represent less than 1% of investor portfolios, less than 1%. And what naturally happens in the Australian market is that you start overexposing yourself to financials, materials, or mining, and real estate. Australia makes up 2% of the world share market, so naturally you're going to lack diversification. So your response to that might be, that's great, Robert, but when markets collapse, everything collapses. The decline is the same, the duration of the decline is the same, and the feeling is the same. And you're absolutely right. Up here on the top left is the Australian stock market and the US stock market from peak of the GFC back down to 2009 where the market bottomed out. Both markets fell about 55% during that time. So my response to you would be, yes, Mr. Investor, that is absolutely right. But where diversification really kicks in is when markets rebound. This is the bottom of the market back in 2009, and this is, as of a couple of weeks ago when this chart was put together. The Australian stock market has increased by about 82% over that time. The US stock markets increased by over 250% during that time. That's where you're going to get your diversification. Yes, everything's going to collapse and everything goes to 0 or 1 at the same time, but it's on the recoveries where we don't know where it's going to come from that you want to make sure your portfolios are positioned to participate in that recovery. You've heard the old saying, don't put all your eggs in one basket, and there's good reason for that. I want you to start thinking about diversifying your portfolio across geographies as well. Let's say back in 2007 at the peak, or prior to the GFC, peak of the market, you invested $100,000 in the Australian stock market and you invested $100,000 in the US stock market. Today, your Australian share portfolio will be worth approximately $80,000 and your US share portfolio will be worth approximately $250,000. Not only will diversification save your portfolio for when things are going down, but it also could speed up the recovery process when things are going up.